Okay, good day, guys. It's trading arbitrage opportunities with Calvin Ports. We had a change in market sentiment. That change in market sentiment is telling me that the market sentiment has changed. And even though I want the market to reverse from a little bit down here after this change in market sentiment, I still believe that the market will get us to this level, but I don't think it might break up there because we did not we did not break below this level. So that's the only issue that I have. If we can get that break, then we can finally say we are going to break higher out of uh, this correction area, this compression area. So even if we do get a rally from here, I don't, yes, it will get us to that level, but I don't have that much of a belief, especially when we are about to get a break out of this level without getting a convincing break uh, below this trend line. Yes, it will break up there, but my hopes are not as high as the hopes that I would have if I had a break below this level. It feels better for me to say, hey, I'm going along on this trade because I've seen a price action confirmation that says we are going up there. So, yeah, the market sentiment had changed, but sometimes because this trade is an economic divergence, most of the time you don't really get. I was talking about this, I think it was on the first episode or the second episode. I was talking about economic divergence and how the market does not want to touch the levels, the trend lines, just flies away. So I believe that this is one of those uptrends that we're going to have, that we will break up here, probably because of the economic divergence, but it feels much better, especially when you are trading any currency that has the AUD and or the NZD. Normally, you get those strong pullbacks, and you get to have your confidence in the trade. Nonetheless, here we have that economic turnaround that we're looking at. So the question is, this is the daily time frame. The question is, how do we hold this trade? And our ways to hold this trade is that we can wait for a pullback from this, and this daily candle can wait for a pullback. Let me show you how you observe that pullback. Let's go for the 1 hour time frame. Can look at this and say, now that we broke above these two levels, we broke above these two levels, and if the market uh, bends out somewhere up here, you can get your feed. Let me remove this guy. Let me remove this guy. You can get your feed and say, hey, market have reversed from this level, and you can use that as a 50%. Is the 50? You can use that as a 50% feed and say we are expecting the market to come back, to reject from that 50 and come at least below this 23 and move higher. So that's how I normally catch my trades when I'm trading this economic divergence. It is a positive carry. However, I need to warn you in case you are looking for to hold larger lot sizes, I need to warn you that the spread in the pound SGD is huge. So it would help you if you look for a trade that is not that big for your account. So I'll be looking at this. I'm not saying this is like 12 o'clock. Let me try to show you the time. This is like 1 p.m. here in South Africa. You can check the time down here. It's like 1 p.m. So this does not say the market had reversed. It does not say that this daily candle has burned out. This is just an example of how I say I hold those trades. Let's wait for the end of the day where the daily candle will burn out, and that's how we are going to be. As you can see, the daily candle is still moving higher, so that does not mean this is the end. The daily candle might continue, but as it gets to its original uh, maximum height, we're going to have this feed. We're going to set it up in this way, and we're going to try to catch this long move. That will take a while. I believe that since we rejected below this trend line, which was drawn with which was shown with these red lines here. I was using those red lines saying this is the feasible level that I am willing to hold long positions from. However, the trend line is down here, so it would have been it would have felt much better for me to hold my positions from below this trend line. So that was the wish that I had. But this is an economic divergence. You might find out that before you open your eyes, the market is already gone. So those are the things about. I had to observe and lose out on very powerful trades because I was looking for those retracements, only to find out that hey, you trade too many currencies and you don't get used to the actual nature of the behavior in that currency. So I don't really know how currencies perform or behave specifically. I just trade what I see. I trade my economic divergence, and however it presents itself, I take the trades. And if it doesn't go to where I'm expect, even if it reverses from this daily candle and it goes lower, I'll still plan on holding that long trade. In fact, if it stops me out when I'm trying to hold it from here, this is just the replica or the expectation of what will happen here. As you can see, this part is this part, and the reversal, the burnout from the daily candle will be this reversal, and the takeoff in the following day, the next candle will be this part. So I just use this to show you the replica of the expectations that I have in this trade. So this is how I do my carry trades, and I have seen that most of the time when you have an economic divergence, the nearest trend line tends to be the one that gives you the three drives to the top. As you can see, we had one touch, and a third touch here. So after we break below this level, that's where I will believe that this third touch is actually taking me to where I want to go. So we can use the nearest uh, the nearest currency outlook or the nearest price action that we can see and focus. What's important here is that when you trade, when you do carry trading, you need to focus a lot on moving your stop loss to break even. Let's say I entered the market here and my stop loss is down here. And the entry level, let me show you a real example of what I'm talking about. Let's say, let me paint this guy red. Yeah, let's say this is what happened? I was painting this guy red. Okay, let me show you. Let's say this is my stop loss level. This is my stop loss, this is the entry level. And I entered the market here. I, it is important that you move your stop loss into profit and you keep moving it from the previous height. Just like this pullback here. I'm expecting the market to reject. When it returns, I'll have my stop loss here, and as the market breaks this high, I'll be expecting a pullback maybe to the 50%, and then I'll keep moving my stop loss into profit until I get to the actual target. Yeah, unfortunately today we have a we have another the take profit level is expected to be here or above that, but this is where I'll keep my stop loss. I was looking forward to having that 10-minute video. Unfortunately, it went past our 10-minute mark. So I apologize for that. Let's. This is the fifth episode. Let's see each other on the sixth episode. Thank you guys for watching.